Good morning, and thank you so much for those of you joining us today. We apologize for the delay, but as you can see, we had a little bit of a surprise.
Surprise.
So with this surprise, of course, we had a few technical issues and a few, the usual Miami
I was
parking
late.
issues.
That's the truth.
Let's just put it that
Let's
way.
cut it to the chase.
So just for those of you who are not from Miami, what time did you leave your
I
your
left,
office?
actually, to be exact, around 8:10 in the morning from Fort Lauderdale.
Fort Lauderdale. So technically, it's what, like a 15-mile drive?
It's actually not that far.
It's
Yeah.
not that far.
No.
So here we go. We're supposed to go live at 10, and we had like literally a few minutes behind.
Yeah.
And of course, sometimes the broadcast kind of shuts down, has some issues and errors. So with that, we apologize. But again, we are thankful for everyone who are here. For those of you who are returning to see the show, we are so excited. Thank you so much for your support. We love having you. And for those of you who are joining us for the first time, thanks again. And please give us a thumbs up or a hands up so we know you in the chat, so we know you are new. And of course, I always encourage you to subscribe to the channel that you are using to watch us, whether it's Facebook, LinkedIn, or YouTube, so you will always know whenever we schedule an event. And of course, in these type of situations, we'll right away fix it and get back online. If we've committed, we are committed. Yes?
Yeah, exactly.
A quick intro. My name is Marie Torossian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor and a CFO. Currently, as a CPA advisor and a transformation coach, I'm using my proprietary and registered now valuation MT methodology to help business owners that have reached their first million to get to their next 10 million and more. I'm also an author, and I've written a couple of books. One of them is an ebook, and it's free and available to you, and I'll put the link there, and it's called A Business Owner's Guide to Operational Accounting. And the second one is for purchase. It's on Kindle, and it's called The Complete Guide to Strategic Growth. And so I want to also invite you guys, I'm doing a 12-week course on Clubhouse on landing big whales, and we're literally walking everybody through my methodology, Valuation MT. I covered the first one, valuing business and what we do to do that. And yesterday I spoke about assessing financial accuracy, which is super important. And so I really encourage you to join me next Wednesday on Clubhouse on Landing Big Whales group. And of course, I have a business bootcamp coming up for entrepreneurs who just started. They haven't hit their million. They want to get there. We want to help you get there. Teaching you all the entrepreneurial mindset that you need to have to succeed, the accounting and tax things that you need to know, not the stuff that you don't really need to get into the nitty gritty, but the things that you really need to know as a business owner. And of course, business development and marketing, which I will have a guest speaker on that as well. So with that, of course, my guest speaker, always my featured guest speaker, is my friend and a tax colleague, Pedro Gonzalez, CPA. Thanks for coming to my office.
Yeah, this is awesome. Now instead of two separate locations,
yes,
we're side by side, and this is great. A different approach and a different taste to the presentation. I'm excited about it.
Yes, absolutely.
This package you're putting together is awesome. I think it's very valuable for entrepreneurs to take advantage of it. I mean, you don't get this everywhere.
True.
I think if you're, even if you're already in the start of your business, having this access to this information is. I don't think you can put a price on it. I think you ought to go and join, participate. Whenever you can get information like this, and in the way that you're structuring this and helping businesses to gain understanding beyond of the basics of, you go around and you say about entrepreneur, be your own boss and stuff like
that. Right.
I mean, to really get into some topics that is important to the business owners. So good morning, everybody. Pedro Gonzalez, your business and tax strategist. We help our clients as, improving their cash flow, like we have said before, and I'm sure that's going to be part of her conversation. Cash flow is the lifeblood of any business.
Yes.
It doesn't matter the size of your industry that you're involved, cash flow is king. Number two, we help with lowering your taxes. Taxation, again, we have discussed this many times in here. Mm-hmm. Taxation erodes your wealth. Doesn't matter, the business and individual. If you are not doing something about your tax planning, it's eroding your wealth. And number three, the other area that we also focus is on the exit strategies. Developing tax-wise exit strategies, because we all gonna exit. They're just gonna depend on how we're gonna exit.
Absolutely.
So those are at least not everything we do, but those are three fronts that we tackle, and this is how we help our clients achieve their financial goals.
Yes, that's excellent. And why don't you please remind them about your
the ebook? Yes,
and
so
the new book.
I know. So the ebook, yes, we have released an ebook on real estate investment tax strategies. We're getting some good feedback on that ebook. It is packed with some good tax strategies for you. It is no additional cost to you. We also added to that is a 7-day e-course that enhances and adds more value to that ebook. We're also working on S Corp tax strategy for business owners. It's geared toward the S Corp businesses. And again, we're going to be addressing is going beyond the basics that, you see a lot of times, why be an S Corp versus LLC. We're going to go beyond of that. I mean, I think you kind of find plenty of other well-written books discussing that. But we want to address some of the topics that we hear a lot of people asking when they get involved into S Corp. And so we want to address that, bring it in what is taking longer is trying to put it in a format that is easy to read.
Sure.
We don't want to make it with a lot of
technical.
Exactly. And people get discouraged.
Absolutely.
So we want to how to digest this information and bring it to you in a format that is easy, easy for you to follow.
That's awesome. I'm going to actually make sure that I put that link as well. Here's Pedro's ebook coming up right now on the link. Because actually, and I wanted to make sure that, that's running long enough, because one of the comments that I saw the other day as I'm reviewing some of our videos that, one of the ladies, she had put in notes that I got one of them and I didn't get the link to the other one.
Oh.
So I just want to make sure I'm running it again. And
Yes.
I did send the link separately, but just to make sure that's there out there for you guys. And I will type it in whenever I get a chance. So with that, so today, and by the way, guys, we always try to, do this completely unscripted, right? Like we never write anything down and you don't see any major papers. We might have some, key points that we want to follow, but usually we don't even decide what we're going to talk about until, like the last minute, because we want it to be as authentic as really coming straight right from here. We're not doing hours of research to come up and say something to you. It's really what we know, what we're doing every day, and we want to bring it to you. So, and then sometimes it populates in our mind like something we experienced just a moment before, the day before, and then we just send the text to each other and just be like, hey, you want to talk about this? And, that's kind of how we make it, the decision of what we want to talk about. Right. And it's really based on our experiences and not just going out there doing a pile of research just so we can show up here and just tell you something. Exactly. So with that, that's what you did yesterday.
Well,
usually I'm the one hounding you to try to get it. Hey, what are you like talking about?
Exactly. I sent you a text yesterday.
It was awesome.
And I thought, listen, because what happens is now we're in the midst of the tax season.
True.
So now the season started and people are starting asking certain questions. So one that came up is capital gains. Mm-hmm. And so and I know that you and I have talked about it, but it kind of somebody asked me about it, so I figure it's a sign. We have to talk about it. That's it.
Exactly. We get signs all the time.
Exactly. So I figure, well, Marie, how about capital gains? You know what I mean? So I figure, well, and I jot down a couple of notes and to help me not to mumble here through 40 to 30 minutes. But I figure let me at least put a couple bullet points to help you. But basically, it is an important topic because a lot of people do not really, I don't think that they really understand the how that works, and the fact that there is another set of tax rates for capital gains.
Absolutely, yes.
And so that's why you see certain people that how is it possible that when you look at their adjusted gross income, and you look at two individuals, with the same adjusted gross income, and one is paying substantially lower.
Yes.
And it's they're looking at how is this possible?
Absolutely.
And it's just a composition of their income. So I wanted to kind of throw a couple suggestions here for you that I think you're gonna find valuable, and especially you're now in the middle of your documentation and so on, but also moving forward. Again, that's what we do here is not only historically, but also what can you do moving forward and changes that you can start implementing. So now, when we're talking about income, we have a couple of different types of income. When we're again looking into the spectrum of income, is you're gonna have taxable, you're gonna have tax-free, and tax-deferred. Now, when it comes to taxable income, which is then the most concerning part, is now the taxable. Now you have determined, okay, taxable, then you're gonna have is what we call earned income or ordinary. We have discussed this in prior episodes.
Right. Yes, we have.
And those are gonna get taxed at the highest rate. And then you're gonna have your capital gains. Now, capital gains are going to have a separate set of rules, and you got to understand once you have determined what is if it's earned income or capital, then you got to then look into is it short term or long term. And the reason is because not they, even though it's in the same class, they don't get taxed
in the same way. Got it.
So now you have determined you have now taxable income. You have determined you have now capital gains. And now you have to then determine, okay, so what is short-term and long-term? It's straightforward, it's very simple, is 1 year or less is short-term.
Short-term, yeah.
More than a year is long-term. So that's pretty simple.
Same on the corporate side of things, anything that's...
exactly, so it's very straightforward, no mystery there. Now, what happens is now you have determined which of the two capital gains you may have, and you may have a mix. So if it's short-term capital gains are going to follow the same structure, the same tax rates and table of the ordinary. So it's going to range from 10% to 37%. That's and they follow the same schedule as your ordinary. Now, long-term, and another point I wanted to bring, going back to the ordinary, and again we mentioned it before, but I wanted to highlight this. In addition to the income tax, ordinary income is also subject to payroll taxes and self-employment tax. Now, when you look at the short-term capital gains will be subject to the same structural rate, except that it's not subject to payroll tax. So you're going to see a little bit of a saving there because you're not subjecting that to payroll tax. Now, long-term has its own set of table, and it's not subject to payroll taxes, and it's gonna use a different table, and that is it has, instead of the longer brackets that you see on the ordinary, it only has 3 rates: 0, 15, and 20%. That's it.
Simple.
Yeah.
Very simple.
Now, there's the magic. There is the magic, and because you can see that the highest rate is 20%.
Yes. Lower than any of the
exactly. And you see this. I mean, you see the comparison when you see in the publications, and you do even you go Google, you compare, and when they're selling the idea that you should have capital gains, they're gonna say, well, 37% ordinary, 20%, which is a good. It's good to be
basic comparison.
Exactly. Yeah. It's a very good, and nothing against that, but it's also something that is left out is the size of those brackets. I mean, when you look at the brackets, then also to me that's where the where the magic is. I mean, I have to look at the numbers because I don't want to give you the wrong information, but just to give you an idea, for a single filer, again we mentioned the 0, 15, 20%. For a single filer, the individual can have taxable income up to 40,400. For the 15% tax bracket, it's going to be taxable income from 40,401 to 445,850. You can have up to close to $500,000 of taxable income, and your capital gain will be subject to 15%.
Wow.
20% is 445,851 and up. Now, married couple, the 0% is up to 80,800 of taxable income. 15% is 80,801 up to 501,600, and 20% from there up. So you can see the that's what I'm saying. You don't hear a lot about the size of that bracket.
Yes.
You can see it's substantially larger for the 15% if you have taxable income on the ordinary income versus tax versus capital gain. If
Yes.
you have, let's say, 200,000 of capital gain and 200,000 of
Ordinary,
wages,
yeah.
that's what I'm saying. You see two individuals with the same
Yeah.
AGI, and the two will have different.
Taxes.
Exactly.
Yes, absolutely.
So just to give you again another example, and I'm going to read it because again I don't want to give you the wrong information. I did a quick calc, and a married couple could make 105,900 2021 and not pay a dime on capital tax.
That sounds good.
Yeah. So, and the reason being is that when you have the 105,900, you deduct the standard deduction of 25,100, that'd be 80,800.
Right. So basically, it's 0% there.
Yeah. So, but what other people are not aware is again the 0%. You hear a lot about the 20%. We don't hear a lot of discussion for the 20%, which I think a lot of the majority of the public will qualify for that 0% if they are aware and they were to simply shift some income into capital.
True. And that's kind of like what we were talking about in the tax planning series, correct? So those of you that may have missed it, please go back.
Go back. Yeah, there's some other tips in here that can be used if you go back. Now, I have had clients with low, let's say, six-figure income that they basically pay no tax, and that is simply because, again, the composition of the income. When we start the conversation, two individuals can have the same taxable income, same number, but because of the composition. If you have, for example, long-term capital gains, ordinary dividends, municipal bonds, and that's your composition of your income, when you do your taxes, it will be zero.
Yes.
Or could end up even zero or very close to zero.
Yes, so minimal compared to if you were having the same amount as an earned income.
As earned income, and that you have heard me say that the tax rules, unfortunately, are not written for the employee. You know, I'm being blunt. I throw it the way it is. I mean, it's and I know some people are shocked. Some people look at me like, "What the heck are you talking about?" But the reality is that the tax rules are not written for the employee. It's written for investors. It's written for business owners. That's what the capitalists, people. That's why you see the difference. Two individuals, one hardworking individual earning $100,000, another individual. Not saying that the other one's not working. Is working tax smart. He or she is now investing as in capital assets that are generating capital gains, and it has the same level of taxable income, but not subject to the same tax rate.
Yes.
And that makes a huge difference.
Yeah. I remember, this is a confession I'm going to make. So I was still in Miami-Dade College and I was still studying. And I did the volunteer, IRS, the IRS volunteer.
Yeah. The tax volunteer. VITA.
So, I was so excited. I'm going to be, I'm going to be helping people. I'm going to do their tax returns. And I'm going to be, getting into it. Because, in the beginning, you're still figuring out which part of accounting you're going to do. And so I was in the classroom. I was like going in there. I did the tax return. I got everything ready. And this woman had literally barely made money. And I had to tell her that, I'm sorry, you actually owe money. You owe, I think she had made, less than 25. I'm talking a while back, and I had to tell her she had to, she owed money because the employer hadn't held the payroll taxes and all these stuff. And this woman started crying and I was like, oh my God, okay, but I wasn't expecting to have to deal with this type of emotional situations. To me, that was one of the big shift for me that I was like, okay, I don't think I want to handle this type of emotional situation at this time, I was like, so I think that may have been a little bit of the, not only the complication of taxes, but going into audit, being more on a corporate side, felt more comfortable for me. In that sense, more like growing, scaling, all that stuff. But now switching back and working with you on the tax side, I can see how we can actually transform people's lives and their businesses by using these strategies, which initially, as a student, I felt so emotionally, like, oh my God, I can't do this.
No, we're in the people business. I mean,
so you have to handle it.
And people are being really affected by taxation. We have said it here many times. Taxation is one of, if not the greatest, one of the greatest expenses that business owners and individuals face. And so it is, and you see the impact of taxation on family. Like you said, sometimes when they're making or earning this money, and
Yes.
they even have withheld and have done their estimates, and they still come with because either certain event that happened, and now they have to pay this tax. And I know how that feels. I mean, looking
Yes.
at them, at me having to tell them, listen, you there was not enough withholding. You didn't, or
Yes.
unfortunately, this event that you realize at the very last month of the year
Yes.
caused this taxation, and that's why we encourage tax planning. I mean,
Yes.
you're more into
Yes.
the business planning. We also
Yes.
help business. That's why the planning part is so critical.
Absolutely.
You know what I mean? If you're looking from the business perspective, outside of the taxation, if you're looking at cash flow management, you're looking, I want to invest, I want to expand, I want to apply for a
Yes.
loan. That you should be doing that before. You don't show up and now when you look
Last
at your
minute.
financial, exactly, you're gonna go and say, give me the last 2 years of financials, and so
Yes.
what was not that good.
Exactly.
So now, if you're gonna come to you, Marie, I'm thinking about, in a year from now, expand. So now you and I will work together, and you're gonna tell me, Pedro, these are the things you need to be doing in preparation for that loan
Sure.
that you're planning on doing. I want to acquire this, and I want to acquire real estate. Okay, so let's prepare now.
Correct.
So in a year from now, you can be going to a bank and be bankable. You're fundable.
Right. Fundable. That's
You know what I mean? And so the same happens with taxation. I mean, now is where you need to be looking at 2022,
Yes.
the things that you need to be doing. So then, looking ahead, so then, your taxation be minimal.
Yeah, absolutely. And then just while we were talking, I just remembered one of our clients that we had to help her recently. Without giving any names, she had actually applied to be taxed as an S corp, and last minute we had to make all these changes because even though she hadn't heard from the IRS yet about the changes, but it's about intent, right? Sometimes
Correct.
that can make all the shift and difference too, and then we had to kind of catch her up on her taxes that we were going to be due. And sometimes that's a big shocker, right?
It is.
It's not anticipated. It just
Correct.
seems to be like, from a business owner's perspective, I'm just switching gears from this to this, but it could make a big change, and they have to anticipate that and let us know ahead of time. Yeah.
Correct. That's why we when we say about we are advisors and planners. I mean, compared to preparers.
Yes.
Or people doing bookkeeping. Again, nothing against the person doing the bookkeeping.
No,
Is
not at all.
that when our approach is different, when we go into the accounting and they look at the service that we're going to provide is going to be substantially different because
True.
it's the forward looking in the case of taxation, the forward looking. I mean, like these events that you're going to be doing today, and how is it going to affect you a year from now? In some
Right.
cases, more than a year. How can we structure that same event that you're about to do? And let's say that you were going to go and acquire a business. Now they can talk to you about the loan, but then what is the tax impact of this? How will this impact me?
Exactly.
I'm going to acquire a business. Should I buy the assets? Should I buy the equity? I mean, how do I structure this business? There's goodwill involved. Or I'm going to sell my business. Marie, I'm ready to sell.
Yes.
Now help me find investors or something. Okay, great, let's do it. We got to package this in a way that is attractive. But then again, there's
Absolutely.
taxation. How do I do it? I want to do it. There's a way to do it. We can make it attractive for investors. And how can I make it less taxing for me? Because at the
Yes.
end, this is the tag that you don't see a lot of times when they're disclosing the sales. You know what I mean?
Yeah.
They say, I sold my business for X,
Right.
but they
They're
don't
not gonna
realize
say
that
how much
X
taxes.
is exactly how much of that you actually can.
Yes, definitely. How much of that was actually taxed to you?
Yeah.
And then in those situations, it's better to plan it out and say, okay, at the same time, once I sell this business, what am I going to do? Where am I going to put this money so that I can avoid complete taxation if possible,
Yeah, and there's
or minimizing as much
Exactly.
as possible. Putting into let's say some type of passive investment opportunity
Correct.
where the money that you're taking, and it's not just going in your checking account and then now you boom taxing
Correct.
right away.
Mhm.
Let's help you invest it or get the right combination for you to minimize those taxes.
Yeah. And there is structures out there that can help you defer the tax. I mean, in some cases you cannot avoid it, but if
Sure.
I can structure it for you in a way that instead of getting all the impact in one tax year,
Right.
I can
Defer. Yes.
Exactly.
Yes.
And all that is cash flow. You know what I mean? Because
Yeah.
instead of having to shell out all this money today,
True.
And I tell you, listen, instead of the 30 all today, I'll tell you, listen, Maria, you can do the same. It's going to cost you the same,
Right.
but it's 10, 10, and 10. It's more manageable, it's more palatable.
Absolutely.
And I say, okay, I'll go that route.
Yeah.
The thing is that people are not aware of that. There's a way to structure this type of transactions that are least taxing. And this is, again, the taxation is what it erodes. You know what I mean? If I can give you a chance then to defer, of course, if you can go a no tax, is even better. But
course.
if, how to utilize tax credit, harvesting for tax credits. And those are the kind of the differences when you see, your tax preparer, those are the kind of things that, you should be at least receiving. You know what I mean?
Yes.
Because what is happening, a lot of people are looking at just at the price. You know what I mean? You and
Yeah.
I have talked about this because they're saying, well, but so and so charges X.
Yeah.
And again, nothing against that. There might be very good preparers, and there's
Sure.
actually very good preparers
Yes.
out there. And they'll take you information, and you give them a set of information. They'll prepare.
Yes.
Yeah, exactly. They'll prepare the return. But are you receiving is information from here that I can do something different to lower that tax?
Absolutely.
That's totally different. The same happened with bookkeeping. Very good bookkeepers out there. They will enter the data. You give them the checkbook, whatever, the bank statement,
Yes.
and enter the data. Now, beyond that, where you as an entrepreneur, this is, harp on this. I know you do it too. It's like, listen, is that information, you need to extract it from that. And
Yes.
then what can I do with this information so I can make better
Yeah,
decisions?
Absolutely. That's
and
the whole point of it.
Exactly. When we go to accounting 101, you know what I mean?
What's the point of these numbers?
Exactly. Because otherwise, what do I do with this?
Yes.
I mean, what will be the purpose of it?
Yes.
I mean, if you're going to give me now December financials by itself, it means
It's already done.
It's already done. Unless I take that information and you do some analysis, you do some
Right.
comparisons, and they say, okay, Pedro, listen, wonderful year. Okay,
Yes.
but I still notice this and this and this, and that. Okay, so I gotta even though my bank account is looking healthy, even
Yes.
though I'm looking
Yes.
profitable, there's some areas I can improve. See, that is value to me. I pay for that,
Yes.
because I rather have, two different accountants. One is telling me, here's the numbers
There you
and
go.
profitable. Another
Yes.
one's telling me, Pedro, yes, you were profitable. However, I noticed this and this and this. In
Right.
those areas, if you improve it, you can even do even better. Your cash flow
Absolutely.
will go even greater. See, that to me is value. That's what an entrepreneur should be paying for.
Yes, I agree, and that's in a way how I kind of put together and my whole system is that was the whole point, was to create that process
Yeah.
of like, okay, we're gonna review this, we're gonna look at this area, then this area, put the structures in, put the policies in,
Right.
because as entrepreneurs, sometimes they start their business and they're just looking right now. Let me
Right.
just
Correct,
swim
correct.
and
Yeah,
not sink and all that,
Yeah.
which is fine. But I think that's also very limiting because they're not looking further out.
Correct.
What's happening 10 years down the road, and maybe 10 years down the road, if you want to be that 2 million, 3 million, whatever it is, the number, and now you want to take additional loans because you want to hit your 20 million, and now you're required an audit or something, and you have your systems completely messed up. No one's going to give you a loan.
Yeah.
The auditor is going to write you up for all the stuff you've done wrong,
Yeah.
and now you have to fix it, and now it's just going to cause you double the
Exactly.
cost
Exactly.
to set those processes. While if you set it up from the beginning, it's already part of your process. Everybody on your team knows how to
Right.
use it, and it's like a well-oiled machine or a fast car.
Yeah. When I look around and I see business owners and I see the difference, and you have seen it too. You
Yeah.
see two individuals that are starting two startups,
Yes.
and and you see one that tends to excel or go faster. And
Yeah.
the other one's struggling. Both started with the same amount of capital. Let's put them all in the same
Yeah.
level. You know what I mean? No, this one started. No, they start with the same level of income. They have the same level of capital. Both
Yes.
were either lent the same amount of money, whatever. But one goes faster than the other, and it has to do with their priorities. That's
Sure.
why when they tell me, listen, I don't have the money to pay for an accountant or whatever, listen,
Yeah.
I look around and I can tell you the priority. That's why when I started, they told me, listen, the checkbook does not lie. You know what I mean?
Yes.
When you open that checkbook, I know now people think a checkbook, but you gotta remember,
Right.
I'm going a couple years back.
Just a couple.
You know what I mean? But the checkbook, and that's why when you can tell me whatever story, but you open
Right.
the checkbook. Now would be your QuickBooks. You open your QuickBooks,
Yeah.
and it will tell you the
Where you
reality.
are.
Where's your priorities? So
Yeah.
when you tell me, where I tell you, Maria, I don't have the money to pay you X,
Right.
but you tell me, Pedro, that this is important to you. This is my value to you. This is your goal. Your goal is to grow this business. If that's the truth, this is what it takes.
Yes.
But I see that you're spending money over here. Is this going to help you achieve this? No. Okay,
No.
so then that's really what is happening.
Exactly.
You know what I mean? And so when we bring it down, and that's why, I tell you how it is. I just, you know what I mean? They come
it is
with,
what it is.
It is what it is. I mean,
Yes, it is.
exactly. If you want to succeed, you have to do these things. I mean,
Mhm.
the planning. If you're not planning, that money is going to Uncle Sam. It's like I tell, it's the drunk uncle that keeps coming knocking on your door and asking you for more money.
Yeah.
To shake you out for more money. And you say, but Uncle, I just gave you some money last week. Yeah, but I still need more. I drank that money.
Yeah.
So it's and I know everybody have somebody like that or a friend. You know what I mean? That seems like it does not seem to get it together.
Yeah.
And he keeps coming back to Marie. Hey, can you help me out? And it's like, no, I can't. And that's the tax planning. The tax planning start putting a halt into this and start creating those walls.
This is a structured way.
Exactly.
It's structured. It's planned. These are the steps we're going to take to achieve that goal.
To achieve the goal.
Yeah.
Yeah. That's
Absolutely.
it.
That's awesome. Well, I love it. I love it. This was a great conversation. I was just want to see any comments, any questions. We have a few hellos. Hello, guys.
Hello.
It was awesome. Thanks for joining us
Thank
today.
you. Yes.
So we are already at the 30-minute mark, and I think this is a super awesome conversation. And again, I want to say thank you so much for joining us today. We apologize for the initial, delays, but I think we are here.
Yep.
We are committed to help you, to educate you, to teach you everything that we know and we experience to help you and your businesses grow. And again, with the words of a famous speaker, Jim Rohn, you are the sum of the 5 people you surround yourself with, and we hope that the 2 of us are 2 of the 5 that you are surrounding yourself with. And with that, I want to wish you a blessed week and hope you have a great rest of your week. Bye.
Take care.